Good evening. Ira Epstein, and it is evening. It's 7:30 p.m. Central Time. So if you think I don't work a long day, for me, I get up at 4, so you figure that out. It's been a long one. And right now, as I said, we're 7:30 p.m. on Monday, and this is the 17th of August, 2020, but the market's already trading on the next day's session for Tuesday, the 18th. Well, we know the Democratic Convention is kicking off. We'll see what that means for the marketplace. We've got a few economic data points tomorrow. We've seen the stock market again. The S&P is for a new high on the move, so that's important. We'll be looking at the close there as I do my financial wrap-up. Gold and silver break out to the upside, so a pullback tonight early on. The question is how much of a pullback. Copper acted really good. I was real concerned last week because we call it Dr. Copper. If it breaks real hard, you got to get worried. What's it meaning for the economy? It did come back, but it's got work to do. In the energy markets, OPEC Plus is meeting now. We'll have an idea tomorrow as to what they want to do. 95% compliance is what OPEC put out today that their members plus are doing at this point, so that's come up quite a bit. And the question is, are they going to flood the market with another 1 million barrels a day, or are they going to let the market get more adjusted? We saw the grain markets take off nicely too. But this is all about metals. And on the metals, we're sitting here right now up $48. It's only going into Tuesday, right? We're at Tuesday trade, so that's pretty good. The market's come off this break low. The market held on the weekly charts, and I pointed that out in my gold report last week, right where I think it should have. And we'll see what that's going to mean for the market. A way to look at what's going on is we've got a trade top and a trade bottom, two spikes in the market if you look at them. The market's sort of trading right in between them, almost dead center right here. The swing line with today's action turned bullish. Now I want to take off the evening action and Mondays. This is what we looked like coming in. We had a pattern of lower highs, and this low was certainly under that one. The key was the high right here, this high of 1974.80. If the market takes it out, you get a pattern without taking out this low first of higher lows and then a higher high. And then the question becomes, where's the 18-day average, excuse me, in relation to it? Well, you can see what you got up to, and you're giving back a little action tonight, about $6. When I put on the moving averages, I am not surprised at all. This is where the battleground for this market is now sitting. Right here, you're in it. You're in the thick of it. I would expect some pros are buying this market. Wouldn't surprise me at the 18-day average, probably putting stops under that 1939 level. But it is a heck of a risk. It's when you look at it, it's almost $50. That's big on the full-size contracts. When you take a look at Bollinger Bands, they're far away from the market. The resistance is up at 2065, the support 1909.90. So are they in play? Well, they are if the market all of a sudden takes out 1939.10 and drops. To get up to 2065 from here, I'm not saying it can't happen, but it is a $70 plus rally. That's a lot. What about momentum? I'm happy to say that as a somebody that thinks gold looks better than it does worse, that this momentum that had been pointing down as of Friday has now gone flat and confirmed that it's gone flat with early evening trade. I'm not saying it's turned up. So what I do say is I think the pros will be looking right in this area. I think the key is the 1939.10 level, and if all things go, then you're looking at the potential for maybe the 2065 level, the upper Bollinger Band again. The gold-silver ratio, silver is still looking good against gold, which keeps the whole complex in fairly good shape. Silver today confirmed higher lows, but it's not got higher highs. If we take a look at the high right back here, and we come to that one right on this peak, it's 28.06. This high has not taken it out. That's 27.88. So unlike the gold market, this has lower highs, higher lows, battlegrounds right in here, support 26.1760. I wouldn't be surprised if the pros wait if you don't take out that high first to make a decision. Would I think they're just going to buy the market there? I don't think that would be the way that they're probably programming themselves. In the copper market, you ended this decline that we had and we're right back into neutral territory. So once again, what really took place, if you look back on the chart, we were developing what I call a pipe. That's when the two Bollinger Bands, the black lines, get real close together and the market often whipsaws you back and forth in those. It gets one day of a breakout. Let's see, we come back into the arrow, but we're widening this area out. We come up for another day, go back towards that 18-day average with an outside day up. This is an important day right here. If you take that low out, you'll often make a run for the closest of a moving average or a Bollinger Band unless you get a big move going back through these highs. And guess what this market did today? That's exactly what it did. So I'm looking at a market that is all over the board, not in a trend, just sort of marching around and seems to be comfortable in this general 290 area. In the platinum market, you're fighting at the 18-day average for direction. You have a pattern of higher lows, lower highs. That is not a trend. You're fighting it right here to decide what to do. Momentum is still down, bias is up. There's absolutely no clue that I'm getting on that chart as to which way it wants to head. And in the palladium, it's very similar. It is in an uptrend on the swing line with higher lows and a higher high, but the bias is down and momentum is sort of just drifting right here. I think it's caught in these bigger Bollinger Bands against the 18-day average, waiting for whatever the catalyst is to tell us what the next move is. If you can clear this 2247 level and close over 2218, I join the bull camp. In fact, I joined the bull camp just on a 2218 85 higher close. But there's a but. Get back under 2131.30 and I'll be looking for the lower Bollinger Band. You're just in the middle of no man's land. In the dollar index, looks to me like the market had its bounce. We had a contra trend move that went from here, drifted to the 18-day average of closes. In that drift, you had lost the embedded reading, got to the 18-day. That's what I look for. From there, now what's the market going to do? So the market starts playing around. This was Friday's close. I'm looking hard to see what this market wants to do here, and if it starts taking out Friday's low of 92.99.5, you again have a pattern of lower highs, and then you've got, when you take out the low right back here, this low of 92.90.5, which I was mentioning on my morning subscriber video, telling people about that. If that one's taken out, and boy it was, I don't see how this market's not going to reach and see what it can hit. What it might be going for is the lower Bollinger Band at this point of 92.55 to see what that's made out of, because you were there before, as you can see, and that seems to be a zone the market's searching for. Like you hear me talking here, it's all about trade selections. And sometimes, if I'm like you, I'm questioning what those are. I mean, if you think I don't read newsletters over the weekend, Barron's, Bloomberg, all the newspapers that I can get my hands on, I do. And you should get at first confused because they're going to show you bullish arguments, bearish arguments, and you want to hear them all. How you decipher them and what you do with them, it's very important. At the end of the day, I pay attention to the chart because at the end of the day, everything you know or think you know is in the last price on this chart. It really is. That is the last determination that people have right now, right here, as to what that market is worth, be it gold, silver, whatever. So what I give you are my ideas on risk, profit entry, or profit objectives, entry points, exit points, and stop out points when things aren't going your way. If you don't have a game plan when you're wrong, you've got a real problem in the market. I talked today to one of my clients, and we were talking about his method of trading. I was listening to what he was doing in stocks, and his attitude, well, when it goes against me, I just let it go. It's going to come back. That's a recipe for disaster. It doesn't have to come back. And don't get me wrong. I realize that the traders newer to the market are going, oh, this whole market doesn't stop going up. You wait. I've got 51 years in it. You just wait. That's not how it works, okay? That doesn't mean the stock market doesn't continually go higher as an index. It's what's in the stock market. Are those companies still around? Are they the laggards and they're not participating? Well, it's the same in the futures market. You get a market like this. Do you want to own the copper? Do you want to own the gold or the silver? That's what I try to bring to the table with you. So I cover all these markets in that morning subscriber video, giving you the ideas, and I make it affordable. To me, if you're going to give this a try, it should be about the price of a cup of Starbucks, the big drink. You're going to be through with that drink in 15 minutes or so, and you're going to get my introduction for 30 days. After that, it does go up in price. It's going to take 2 of those Starbucks drinks for the rest of the month, but you're getting 30 days of a lot. My webinars are included in it. My special reports, free access to those as well. And then my other things that I keep throwing out. So read about it. Give it a try. Go to www.iraepstein.com under research and away you go. I'm Ira. You have a good day.